So after being a strong, red-hot stock since the end of 2020, Ford got hammered yesterday despite strong first quarter results. Does this present a buying opportunity? I'm Joshua. Welcome to Milk Money, where we learn how to make our money, make more money. But first, a reminder, I'm not a financial advisor, so invest at your own risk. However, if you'd like more stock ideas and updates, please like and subscribe to my channel. One of my favorite ways to find value is to keep my eye out for opportunities in the market where a good company has some type of short-term setback that tanks the stock price. As investors get jittery over bad news, but the key here is that these are short-term problems. Then in a year or two, you end up with a company back to normal and a stock that has recovered most of its value, giving you some great gains. Ford could be fitting that bill perfectly, as their price was down almost 10% after earnings, after they announced production slowdowns due to chip shortages. If you can't make cars because you can't find chips, then you can't sell them. This will definitely hurt their sales this year. However, if we believe Ford is going to be in good shape long term, this would be a great buying opportunity. So let's dig in a little and see if this is a buy now or a sign to stay away. The earnings report was actually incredible, with them beating earnings estimates, and they reported a record $4.8 billion in pre-tax profit. As a Detroiter with ties to the company, I've followed them for a long time, and strong profits have always been hard to come by, even with hot vehicles in their lineup. So I think this is a great sign, especially on the backs of the pandemic and chip shortages, which didn't start today. They've been dealing with production slowdowns for months. The jitters seem to come from the slashing of guidance going forward in 2021, as the chip shortage remains a pretty big problem going forward, and the overperformance of the first quarter maybe could revert to a mean. But Ford CFO John Lawler predicts that their reduced guidance for this year will be a launching pad for 2022. As they are able to ramp up and beat artificially reduced expectations, this could lead to a very strong year for the stock in 2022. The chip shortage hasn't been all bad, as they were able to offset some of the impact through higher prices in vehicles that customers were willing to pay. Maybe some of that stimulus money went into new F-150 Platinums, as Ford reported $3.3 billion in income, which was its best in almost 10 years. Wall Street predicted 21 cents earnings per share, but they smashed that by reporting 89 cents per share of earnings. So you killed earnings, why tank? I think it's really the uncertainty on how bad the chip shortage will get and how long it will last, and the possibility that Ford got away with it for previous quarter sales but won't be able to for the next season of selling. Uncertainty, always bad for stock prices. Investors worry that they may be struggling even into 2022. So we have some very strong underlying sales numbers, making me confident in the company to get through the short-term headaches, especially if CFO Jim Farley's promise and prediction that lower inventories will actually reflect in higher profits going forward. So we have a short-term bag tanking a possibly good stock. If we have long-term potential, then it's a great buy. So are there any reasons to actually be excited about future performance? For me, there is. The F-150 remains in high demand, and I think Ford and all of the Detroit automakers are going to shock the financial world when they overtake Tesla. I know that sounds crazy and that's a hot take, but I really believe the legacy automakers are being underestimated for their ability to make electric vehicles going forward. Sure, Tesla is the pioneer, and maybe their technology has been, or some would argue currently is, better. However, the big automakers know how to actually ramp up production and fulfill orders, something Tesla still hasn't done. And Ford so far has a home run with their Mustang Mach-E. They are sold out, you can't buy one, and every review online has raved about it. If their electric F-150 performs similarly, and in 5 years the production capacity is up to levels of their non-EV cars are now, they could be a huge player. This is the biggest opportunity. With all the Tesla hype, everyone is forgetting about the real automakers. The market cap of Tesla is bigger than all the major American automakers combined, because there's an attitude that Ford and GM are dead. Maybe it's true, and maybe it's my Motor City born bias, but I think Ford will overperform those expectations in the EV space, which gives us a huge value opportunity as positive reality pulls up the downbeat expectations. So what's the bear case? This could actually be the start of a long-term downtrend. Who knows? But there are legitimate reasons for concern. First off, yes, it's Ford, and Ford has always been a cyclical stock. It has years of weakness and years of strength, and then rinse and repeat. If the economy doesn't recover like people predict, or we go into a real recession soon, then the positive cycle they have been experiencing can easily reverse, and you have a sub $10 stock again. And of course, if the chip shortage doesn't get fixed, they won't have cars to sell no matter how hard they try. I could be way too positive on how quickly it will get resolved. As we see, pretty much every industry is struggling to find chips. And Ford, not just competing with other automakers for chips, it's every electronics company competing for the same chip production capacity. Also, one of the hardest things about Ford is they are a heavily unionized company. Politics aside, this has always created pressure on its bottom line as increased sales end up being eaten up and absorbed by rising wages, and it's one reason why Ford struggles to ever be profitable. I feel a little better about this aspect now, though, considering how profitable they were in this first quarter earnings report, but it could always be a long-term risk. So, my conclusion, and how am I playing it? To be fair, I do think there is a possibility that this is the start of a downtrend over the next few months, so keep that in mind. However, I'm betting on the idea that this is an overreaction in an overbought stock after an incredible 20+% run to start the year. So this is a medium-term play for me mostly. Ford is never a buy and hold for a long time type of stock for me due to the cyclical nature. So I'm not going to load up for a 10-year, never look at position. However, I did buy a few hundred shares with the idea that holding to mid to late 2022 to 2023 as the production problems rebound and positive catalysts push the stock up to the $15, maybe even $20 range, then I would take profits then. For the short term, though, I took advantage of the volatility and the sell-off to sell puts, since the RSI is near oversold positions and the lowest it's been since the COVID crash, and I wouldn't mind adding more lower. Although I suspect they will expire worthless. I sold 45-day out puts at $11 for about 45 cents for about a 5% return. I'm considering buying just a call or two even as well for a quick return on a snapback rally, but it might consolidate for a while, so puts are probably the safer bet for an options play. Anyway, what do you guys think? Underreaction, overreaction? Is the Moxie amazing? Stupid? Let me know how you're playing it in the comments below. Again, I'm Joshua. Thanks so much for spending time with me. Hope you like and subscribe. Let's learn to get rich together, and we'll see you in the next video.